After an incredible 9-week winning streak, gold prices are finally losing a bit of shine. This week, gold is on track for its first weekly drop in nearly 10 weeks, and investors are watching closely to see if this is just a short pause or the start of a deeper correction. Spot gold slipped to around $4,100 per ounce, while U.S. futures are hovering near $4,120. That's a pullback of more than 3% for the week, after hitting an all-time high above $4,380 just days ago. So what's causing the drop? Well, it's a mix of several factors. First, profit-taking. After 9 weeks of strong gains, many traders are simply locking in profits. That's a natural move after such a long rally. Second, geopolitical calm. Earlier, rising tensions around the world had boosted safe haven demand for gold. But now, as some of those worries ease, investors are shifting money elsewhere. Third, everyone's waiting for the U.S. inflation data, also known as the CPI report. This data could decide gold's next big move. If inflation comes in lower than expected, markets will likely expect rate cuts, and that's usually bullish for gold. But if inflation surprises on the higher side, the US dollar and treasury yields could strengthen, putting more pressure on gold prices. Speaking of the dollar, it's been holding strong lately, and when the dollar gains, gold tends to lose some of its shine, since it becomes more expensive for overseas buyers. So where could gold go from here? If inflation data comes in soft, we might see gold bounce back quickly. But if the numbers are hot, we could see more downside before things stabilize. Still, in the bigger picture, gold's fundamentals remain solid, with central banks continuing to buy, inflation still lurking, and geopolitical risks never fully going away. In short, this week's pullback might just be a breather after a long run-up. But as always, the next big move will depend on the data. If you found this update helpful, don't forget to like, share, and subscribe for more easy-to-understand updates on gold, silver, and global markets. Thanks for listening, and I'll catch you in the next one.